Hello everyone, this is my dream car. When you look at it, do you know what brand this car is? This is the XPeng P7, an awesome car. I'm getting the same question every day. Should I buy NIO or XPeng? Before we get into more details, let's look at the high level why EV is a buy. With Biden is going to be the US president starting January 20 for next week, one of his focuses is the green energy efforts. During his campaign, he said his administration would like to spend $2 trillion to develop green energy. This includes different aspects, but the detail will possibly share by this Thursday the 14th or the following week for the details. There are a lot of speculations, but definitely EV also will be part of the beneficiaries. Moreover, whether you believe in global warming or not, global leaders agree to be more environmental friendly. Europe is planned to be all emission free by 2025, while China is committed to be 20 to 25% electric or hydrogen cars by 2025, as well as half the sales by 2035, and US, due to complexity and large population or whatever, it will achieve nationwide carbon neutrality by 2050, driving clean energy technology costs down, such as battery development, EV charging stations, increasing incentive for NEVs, and electrifying public vehicle. When you look ahead, 2025 is not really far away from us, right? Just a few years and it's going to be quick just like that. I know you've heard a lot about NIO, especially last couple of days for the big show day. In contrast, XPeng is a more lay-low type of stock, which I actually like it better. As you know, China is the country recovering the fastest from the pandemic. The manufacturing production index outperformed the consensus, and Shenzhen Composite hit all-time high. Over the last few months of journey, XPeng has not been disappointed shareholders and holding up very well. The primary objective of XPeng Motors is to build high quality and cost-effective vehicles that are younger, intelligent, electric, and internet-based. It shares a great vision to be a global intelligent travel solution provider and manufacturer. XPeng Motor is the first and the only Chinese automaker to have end-to-end closed-loop R&D capability for autonomous driving. That is the biggest and best selling point of XPeng, which is different from the brand of NIO and Li. And the only Chinese company that has built its proprietary synergetic sensor capability. So the sensors is really a different phase and different version, and they upgraded, and so the capability and everything is really, really good. The biggest selling point XPeng differentiates itself from its competitor is an in-house development strategy and own expertise. Since everything was trying to develop in-house, they have a team and they will build up the expertise to support and deploy the line. This also helps to drive the cost down. In terms of company startup, production and sales have exceeded expectations very well. XPeng outsold most of other Chinese companies in September 2020 with sales of 3,478 EV deliveries. XPeng Q3 2020 delivery rose 266% year over year. Again, 266%. Moreover, 5,700 vehicles were delivered in December 2020, up 326% year over year. And that add up to Q4 deliveries of 12,964, which is up 303% year over year. All these again over hundreds, which is really incredible result. And backed by China e-commerce giant, the stock Alibaba, this company that continued to grow. With an exceptional runway of EV sales on both third quarter and fourth quarter of last year, XPeng may be very well exceed 50,000 deliveries in 2021, which is better than the current estimates. Current estimate, I think, is roughly 25,000. Scalability is really a key of success in this industry. And based on what we have seen so far, I think XPeng may very well just another quarter and year to beat the estimates. Last month, XPeng also delivered its first EV to Europe. Customers in 28 cities in Norway also received their G3 SUV. This is a great milestone and mark XPeng international smart EV brand. The company also plans to sell P7 in Europe this year. So again, this is going to be, they have a strategy of a way to grow their sales. Moreover, the company starts a prototype of flying car. So this one I'm really not sure about it, flying car. But they said they have tested it. It's pretty good and it's safe. So P7 received very good feedback and quite popular. An interesting fact is that it took 4 months to build a P7, while NIO E56 and 58, as well as Lear took 7 months to build. Recently, companies spend more efforts on customer appreciation services because in order to grow the business, they have know that they need to focus not just the quality of the car, but also the customer service. XPeng has held the largest Sync-like show to attract customers. Most importantly, which is a very, very important point, convenience is a very big factor. Everybody knows that, well, electric vehicle really awesome and great, except I need to charge my battery. So this is a really big factor and advantage of XPeng. They have over 670 charging stations in China and also partner with NIO to allow using the battery swapping. So actually NIO customer also be able to use the charging station of XPeng. From a strategic standpoint, early of December last year, it has announced partnership with Levos, which customized whole risk sensor that will help to drive cost efficiency, reliability of production model. So that's another way, a strategic way to make sure the business will meet the plan and actually exceed expectations. XPeng is also very smart in financing the business. Well, maybe not the first time, but definitely the recent announcement. Early in December, company offered 40 million shares for $45 per share to raise $2 billion. The increase of capital will help pursue growth opportunities, which is a long-term positive for the stock. Well, because of that, also the stock actually sink and from $50 sink all the way. And actually, it was even hit below $40 at one point. But then after the expiration of the sales, which expired on December 11th, the stock price then a couple of days way back up over 50 and then slip again. But then obviously, you probably look at yesterday, which will show the chart how great and what a comeback of XPeng stock. From a share price perspective, there's still more upside based on the history of 52-week high at $75. Take a look at this pricing graph. On November 19, which is around here, NIO and XPeng share price are intersecting with each other. There then was 13 days, which is this, you can see the blue line here, right here up to here. 13 days, XPeng will lead in the way ahead of NIO price until the momentum has lost and XPeng price, as you see, actually have kept falling and slipped to around $45, $40-ish. NIO price has pushed upward at beginning of a year, as you know here, beginning of year, due to the option price exercise, and then announcement exceed December sales over the weekend, and NIO Day drove the stock up 10% Monday, which is really way high up there, or way above on the day before here, which you can see that the wet here, and then pull back Tuesday. However, XPeng was 1 day behind and uplift by 22% on the 12th, which is yesterday. What a way come back, right? So 22%, which all really caught up with the way they were kind of underperforming, all caught up. So based on this observation, you may be very well a chance XPeng price will be over NIO again. I mean, I don't know that yet, but I'm just telling you, it could have happened. Compared to NIO, XPeng has a stronger balance sheet. Based on the information available, NIO has a lot more debt and open account payables than XPeng, at least in the full financial year of 2019. Another thing I consider as a positive is that XPeng has a PE ratio of 10.4x, but NIO has a PE ratio of 50 plus x. So this suggests that XPeng can go even higher regarding share price. And regarding the earning expectations, both NIO and XPeng are expected losses in 2021 and 2022. Since NIO has 2018 financial history as well, it clearly showed that the earning per share losses were a lot smaller and profit margin were significantly improved since they were making more vehicles compared, percentage wise, from 2018 to 2019 and 2020. So lastly, XPeng is expected to have a third model delivered by end of this year. Again, XPeng is very smart in financing. So rather than having more debt, the company has secured a new $2 billion credit line, $2 billion US dollars credit line to help expand manufacturing sales from 5 Chinese banks. So you gotta understand these Chinese banks are not stupid, So they have looked at obviously the proposal, the milestones of selling, the KPIs, different ways from the banking industry, how they evaluate performance, future performance, financial performance, possibility to pay back the money on the credit line if you needed to borrow, what kind of interest you'd be charging that makes sense for that business. So apparently these banks were thinking, XPeng is a really good business, have a great potential in the future, and you will continue to, from a scalability standpoint, will continue to beat expectation about, the vehicle that is needed and delivered over China. The additional fund is to build another manufacturing plant due to be completed by 2022. Again, scalability, right? This is a very strategic means to ensure EV will be complete and delivered without delay. So, as I've given all the various reasons and this share price graph and the wonderful P7 pictures of the Caesar's car, I hope that this should give you a very good idea where the price, what to expect for XPeng and the stock price in this year and the coming years. I hope you like the video. If you have any comments, feel free to drop me and ask me questions. And please give me a like and subscribe if you have not done so. Thank you very much, and I really look forward for the momentum continue to push tomorrow. The P market look good, it's still a little higher, and you will go. And my expectation is if the momentum continue with what's going on with the Biden administration by next week, you may actually XPeng potential could hit up $60 or even higher, so then you will be exceeding NIO prices again. But again, it could be a short term just overriding that, and the two stop basically kind of racing against each other. I mean, NIO at this point definitely is way behind, but you could also potentially catching up. Thank you very much.